Indirect tax implications on computer software. The information technology sector has emerged as one of the most booming sectors in the global economy, and its success is partially attributable to various existing and newly developed computer software. On the financial front, this had initially opened a Pandora's box when it came to the taxation of computer-driven software products. What is a computer software? A joint reading of the provisions of the Income Tax Act, 1961 and the Copyright Act, 1957 along with the Supreme Court's decision in LML Limited v. Commissioner of Customs, defines the term computer software as a set of one or more computer programs, recorded on a particular information storage device, which provides instructions to cause a computer to perform certain tasks or achieve particular results. Computer software are recognized as intellectual property under the Copyright Act, 1957. Pre-GST regime. Previously, the sale of non-tangible goods was exempt from the levy of sales tax, as only those goods which were supplied in tangible form were subject to tax liability. Thus, due to the computer software's non-tangible nature, they were exempt from the levy of sales tax. However, pre-packaged software attracted value-added tax of around 5% and service tax of around 15%, whereas the manufacture of IT products in a tangible form, through pen drive, hard disks, etc. were subject to additional excise duty. GST regime. The Central Board of Indirect Taxes and Customs, through its frequently asked questions dated December 15, 2018 and sectoral FAQs on IT and IT-enabled services, clarified that the supply of computer software is to be generally treated as the supply of services, but when such computer software is purchased off the shelf through any medium or storage or made available via encryption keys, it qualifies as a supply of goods. Supply of computer software as services attract GST at 18%, and such suppliers are entitled to avail input tax credit for such supplies. Procuring a generic computer software online, which may be purchased off the shelf as well, is a supply of goods under GST. Contrastingly, procuring a specific computer software online, customized as per the requirements of the customer and made available to that customer only, is treated as supply of services. A customized computer software purchased from an international seller falls under the category of online information and database access or retrieval services. For the procurement of OIDAR services by Indian residents from international sellers, the Indian recipient shall pay GST on reverse charge basis. The export of computer software outside India is a zero-rated supply and does not attract any GST liability. The suppliers can claim refund of input tax credit for such supplies. AMLEGALS remarks. With the implementation of GST and the standardized treatment of supply of computer software under the GST regime, the situation is slowly but steadily stabilizing in India. A levy of 18% GST or IGST on the supply of computer software is likely to benefit the IT industry, as it has eliminated the additional levy of concurrent indirect taxes on select software, as was the case in previous legislation. This bodes well for transnational software transactions and the emergence of India as a strong market player in international software markets.